So you've got your buyer ready to make an offer and you suddenly find out that they're FHA. What do? You thought that they were going to be conventional or maybe even cash, and out of nowhere, you feel a little blindsided because it's FHA. What do you do? Well, this is Ron Wojciechowski with Real Estate in a Nutshell. And as a former lender, before I got into real estate, I had a lot of experience with FHA. And I don't want you to be too worried about it. FHA is a great program, and a lot of buyers will benefit from the features of it. And it's been around for, 50, 60, a lot of years. This much I know. It's a pretty straightforward program that requires a 3.5% down payment. So if it's a $100,000 property, $3,500. $200,000, $7,000. So you pretty much know what their down payment is. It's pretty easy to calculate. You'll have to make sure that your buyer has enough money for closing costs. And quite often, this gets confused with what we call a first-time home buyer program. I mean, it can be, certainly, and you're allowed one FHA loan, but it's not necessarily anybody can use it, not just first-time home buyers, and it can be reused. Typically, you can have just one at a time. They will make a really extreme exception, but I wouldn't bank on that. What I would say is this: if you have a buyer that's looking to use an FHA loan, a couple things to keep in mind. Number one, down payment 3.5%. Well, that's just math. That's pretty easy. The financing on the offer, 96.5% is what you're going to write in there for the financing amount, unless they give you specifically a different amount, because you can put more down. Closing costs. Well, here's a curveball. In conventional loans, you can use 3% concessions. In FHA, you can go to 6%. The problem is, at $250,000, 6% is $15,000. That's a lot of closing costs, and you most likely can't use them all up. So often we see FHA getting 3%, which is more in the park, and the property still has to appraise. So if you are doing a loan or a purchase at $250,000, with 6% concessions, it's only, $15,000? It's $235,000. $250,000 minus the 15 concessions, that's $235,000 to the seller. That's a $15,000 gap, and you may have some appraisal issues on that. Typically, it's about 3% is what we see asked for. Sometimes it'll be just a flat dollar amount, and you could do either one. It doesn't have to be 6% or 3%. It could just be a flat amount. So let's say that you wanted $250,000 purchase price, and they wanted to help of $5,000 for closing costs. We'll just write that in the additional terms, that the seller to pay for buyers' prepaid closing costs, and that would be the $5,000. So the seller would pay for the buyer's closing costs up to $5,000 for prepaid items and closing costs. That's one way to do it. So $250,000 minus $5,000, $245,000 net to the seller. Still has to appraise for the $250,000. Now, what else is going on with an FHA loan? Well, you're going to have to get the WDO, the termite report done, and we're going to have a home that will pass that free of termites, free of wood rot mainly. Those are the big items. FHA appraisal is going to look at things like your plumbing, heating, AC, and electric a little more stringently than perhaps a conventional appraisal, similar to a VA. And with the government loan, there will be mortgage insurance for the life of the loan on an FHA. That was something that changed a few years back. So keep that in mind as well. If you are on the buy side, just understand that you'll need the disclosure for the FHA disclosure. You're going to have to say on there that it will have to appraise for at least the purchase price. And then they may ask you about repair costs involved, which you can limit to certain amounts to make the deal work. So don't forget the additional FHA disclosure. Now, if you're on the listing side, before you freak out about FHA and, oh my God, these have been ruining our lives forever, the fact is, it's a great way for a buyer to get into a property. And with super low interest rates right now, it opens up your pool of buyers. If you're only fishing for conventional and cash, the seller may not get as much money as they're looking for. They may have to compromise on the price. What if we kept the door open for FHA buyers? It's a great program. It's been around for quite some time. Call up the lender. Get the Prequal letter. Just go over with them. Is the buyer sent in their full application? Do you have copies of their pay stubs and tax returns and things like that? Great. And how does the debt-to-income ratio look? Questions like that. These are pretty basic questions I would ask any lender at any type of a deal, but particularly on FHA, you want to make sure that the buyer is going to be able to accomplish the goal of closing on the property. So if I get an FHA offer, there's two things I look at, and it's going to be the price, and I'm also going to look into the additional terms to see if they're asking for closing costs. And if I don't see anything there, I'm going to make sure with the other agent. I notice it's FHA, and I don't see any request for the seller to help pay for the closing costs. I just want to make sure that we're starting off on the right foot here. And it's not to invite that. What I don't want to do is go under contract for $250 and find out a week later that, oh, by the way, they need 3% concessions. Well, it's nowhere in the contract. And if the buyer is going to fail because they're missing that $7,500, we're better off not going under contract. It does a disservice to the seller because now they've wasted a week's time, and now every buyer is going to say, well, why did it not work out? Was it inspections? Well, no, it's the buyer needed help. We're better off not going under contract. Contract blew up, or it changed the seller's net, which is really the big thing. It's a $7,500 swing. Probably not something that the listing agent wants to give up, and probably not something that the seller wants to give up. So let's make sure, start with the end in mind. If it needs concessions, let's get it written in there and make sure we get to the proper amount from the get-go. Once that VA appraisal or FHA appraisal is done, that locks it in typically for 6 months. So whatever number you get, you're going to have to live with for quite some time. Let's make sure that our buyers are protected and get what they need to close the deal, because they're risking the cost of inspections and appraisal, which could be about $1,000. And let's protect our sellers and make sure they don't get tied into a deal that can't possibly close. If you have questions about FHA financing, message me below. Happy to answer them. If you like what you're hearing, please comment. Let us know how you feel about this. Click comment. And by the way, don't forget to subscribe. This is Ron Wysakarski for Real Estate in a Nutshell.